Eduardo, good to see you as usual. Hey, Duncan, Antonio, Marlene, Scott. Marius, Ernest. I don't know how many people are new here. I see a lot of our members are in here. Jason, John, hey, happy Thanksgiving to you, John. Thanks for being such a loyal and supportive part of the Pattern Trader family. Kwame, Tyrone, how you doing? Constantino, Eric from Denmark, new, great, Eric, good to have you. Joe. All right, so I think we're on the nose. I'm going to get started early. I got a little bit of a headache. I had a crazy day. So let's just get started. So welcome to the last of the 3-day live trade webinar series. My name is Mark Shawson, the Pattern Trader. For the last couple of days, we've been talking about my price action, price pattern trading philosophy, where I only look at price to make a determination in the market. Now, you know, kind of in a nondescript market over the last 2 days while we've been talking, I think I pulled out about $245,000 out of the market, doing everything that I tell you about, talk to you about, the trades that I was looking at, and only looking at price. I look at price as energy. Energy accumulates, energy distributes, then it builds up again. And so I only look at price. And, the analysis of price charts tells me where to enter a position and how to manage my risk. And we talked about, how to find the discipline of only finding high probability trades with 3-to-1 risk reward opportunities, trading either at the beginning of the day or at the end of the day, and trading 3 instruments at one time. I violated my own rule today. I must have had, 8 different things on this morning. And so I felt out of control. And I quickly got it under control, took profits on everything, and then the market went down. So it was just pretty cool. So the idea is just to be in control of your trading. So we talked about this 4-step trading methodology. I shared my book if you downloaded it yesterday. Either, find a market that's trending. Market can either go up, down, sideways, or turning from bullish to bearish or bearish to bullish. Before a market turns, there's always a chart pattern that kind of governs the trajectory thereafter. Once I find the pattern, that I look for what I call my insurance bar, either a key reversal or an inside day bar. I bought Restoration Hardware on the close after we saw 2 inside bars. And, the smart thing is to kind of let the market confirm what you're looking at. Sometimes I just buy things on the close, or I buy things right on the opening, but the smart thing is to let the market kind of do all the work for you. So these are kind of all the trades that I kind of came in. Some I had already closed down before I took this screenshot. You can see I got out of these S&P call options. I bought them for $1, and you can see they were trading at $3.75. That's where I got out. So I made about 400% in 2 days on those call options. I had 8,000 shares of CRM, which I talked about yesterday. I bought these around the 145 area. Today closed at 152. It was up about $3 today. So I made about 24,000 on those shares and about $60,000 over the last 2 days on CRM. I was also long CRM call options. I bought the 147 call options when the stock was 144 yesterday. And today I blew them out at 142, and I blew them out north of 4. I bought them for 1, and I blew them out for north of 4. So I made 400% on that. I had some HYG call options that I bought for about 22 cents. I blew some out at 70 cents. today. I had some Qualcomm options today. I bought them at $1. I blew them out at around $2. And then I also bought the triple Qs right on the opening today. I either do something in the opening or the close. So I thought the energy had built up in the triple Qs. I bought them right at the opening. I bought them at $1. They went to $2.89. They went from $1 to $3. I made 300% in about 2 hours. And then I rolled them into the 289s and made a whole bunch of money there. So this is only half the menu. It's kind of had a crazy day. I can only show so much. So this is kind of a microcosm. So yesterday I bought these Salesforce options, the 147s that expired on Friday. So, they're like ticking time bombs. I bought them for $1.03 and I blew out of them between $3.75 and $4.45. So I averaged about 400% on those. And I had 150 times whatever. So I made about 50 grand on those. And then these were the S&P calls that I bought, I guess, 2 days ago at $1.14, and I blew them out at $3.60. So, I had a nice couple of days in a market that really hasn't done a whole lot. It's really been a nondescript market. And this is what I went home with. I'm long the 289 calls that expire on Friday. So hopefully they do something on Friday. It's a holiday. By the way, happy Thanksgiving to everybody in the United States for tomorrow. I went long Restoration Hardware on the close. I actually bought this around $273 and it closed nicely. It closed $276. So I snuck out like $3 in the last half hour in Restoration Hardware. And then I also bought a whole bunch of silver call options, SLV. These expire the end of next week. And so all of this is just based on the analysis of what we've been talking about. These are just a microcosm of, some of the trades I've done in the past. And so this is all based on just price action. So I guess I'll just do a quick overview and some of the things that, I've talked about. I talked about Restoration Hardware. So Restoration Hardware is kind of funky. I said I typically don't trade sideways markets, but I look at markets in terms of energy, right? That energy's coiling. So again, these are pretty sideways markets right now. So, to pull out the kind of money I did in kind of a nondescript market is pretty cool because, these markets really are kind of doing nothing. But, most people just see that, but I try and kind of look within the pattern, try and see what's going on and see, what is the next direction? Which way is it likely to go? And this one is kind of hard, really is. But, all the way over here, there's this kind of funky little, what looks like a bottom. Then you kind of got another bottom here, and it's kind of a rounding bottom. And so this kind of feels like it's got a bit of a base to it. This feels like there's accumulation versus distribution. So look, this isn't, I don't know how this will work out. I'm just kind of looking at this where you have the last 2 days, you've just got this storing of energy. These two little inside bars, these two little, nondescript little bars. And I'm now saying, I'm looking at a pattern that happened 6 months ago that suggests to me the energy is going to go that way. And so, I took a shot. I bought it here. But the nice thing about this is that, if it starts kind of getting under here, I'm going to be gone. So I look at everything in terms of risk and reward. So this is my risk, and that could be my reward. So to me, it's all about finding little areas on the chart where you can take a shot and have a small amount of risk for a much bigger offset. So, I went home long restoration hardware. So we'll see how that works out. I talked about CRM yesterday, that I had a sneaky feeling that this thing was going to turn around and perhaps turn around big. And I made full 100% on the options in 2 days. And I've got a nice stock position. And I'm now poised for a nice upside move should it occur. So this is CRM. And, this is what it kind of looked like. Let me see, hang on a second. So it's easy, it's easy to say afterwards, but this is what it looked like yesterday before I bought it. And it's kind of like restoration hardware. Sometimes, like Wayne Gretzky, said, you can't look where the puck is, you got to look where it's going. Now, why would I think it's going that way? Because it kind of has this funky area here where it looks like it's trying to, it's actually, there's a little bottom here. So now if you get close to this area where there's a bottom, at least I kind of have an area where I feel like I can take a trade and camp out and see how it works out. And, who knows if I'm really right. And I kind of have a feeling I am. Sometimes you just have a feeling. I had a feeling about this trade. I loaded up on this trade, bought 8,000 shares. I bought a couple hundred of the options. And I made a lot of money just in the last 2 days on this thing. So, yesterday or before the market, this is what I was looking at. So the way I look at markets is that, if it opens, this is what it did. It opened and went lower. Then it started coming back through the previous days unchanged. The previous day's close. So, what it looks like is that, okay, this looks like a reversal where it goes lower, comes through here, and this is exactly what happened. And so I visualized that happening even before it happened. And here we are. Made a little key reversal. You could have actually just bought this on the close. And then you had, a nice move higher. And I have a feeling this is going to go true north. So that's CRM. What else did I say? I bought silver. So I talked a little bit about silver yesterday. And sometimes I look at charts for what they are doing as well as what they're not doing. And well, let me just look at the spot silver. It's easier to kind of see it this way. So when something doesn't go in the direction that, I think it should, or what is suggested by the patterns, then all kinds of red warning signs go off in my brain. Like, okay, there's something wrong here. And if you're on the wrong side, you better get out fast. And then you can also make, lemons, whatever the saying is. So here's what I'm saying is that here is a bearish price pattern. And then in the more recent time frame, there was a bear price pattern here. And I actually made a lot of money in this fall. I shorted gold and silver and made a ton of dough as it came out of this pattern. But collectively, I looked at this whole thing and I said, once it violates this neckline, then this should be gone. We talked about this yesterday, where once, I see this, then this is what I would have expected. Now that things kind of like revisiting, I'm saying this is not right. So, if this thing isn't going down, then it's going to do that other thing. And, to my dumb brain, that's how I think. If it's not going down, then it's got to go up. So, you kind of have this neckline, which is a tripwire. A neckline is simply a line drawn through the pattern. And now, you broke here, and this should have signified and confirmed a down move. But now we're coming back and revisiting this neckline. Now, sometimes you will test it. You know, this is what I do expect. You break down, you do a retest, and then it should be good. But, you know, now we've kind of hung around here and we've got a small little bottom in here. And, you know, now we've got a bit of a reversal going on. So I just went ahead and bought some call options today, and I'll probably buy some more on Friday. So you can see we've got a little key reversal here where it made a new low, and we'll have to see how it closes on Friday. This is a weekly chart, so where this closes will kind of tell us a lot. But again, to my way of thinking, if it's not going to go down, then it's going to go that other way. So I just bought some call options on this ETF called SLV. And that's another way you could play if you're not, you know, don't have a futures account or a spot account. You can always play silver with this ETF. Yeah, lemonade on lemons. I'm slow today, guys. I had a hell of a trading day, man. I just feel like I punched myself out. That's really it. I mean, that's just kind of a, you know, in terms of the indexes, I don't know. These things look like they bottomed. You know, we had talks of recession and calamity and Fed and whatever. But for right now, these things have bottomed. We'll have to see, you know, sometimes you see these bear market rallies. And, you know, I don't know if this is still another bear market rally. I think it is. But for right now, you kind of have to respect what's going on in the short term, which is, you know, we've caught a bottom. You know, there's bottoms in all these indexes. Now, the question is, you know, how far does this extend? Is this a real? Because you can see in bear markets, you have these real vicious uptrends, but they're just rallies in bear markets, and they usually don't make new lows. Now, this is what I was expecting, but, you know, I got to look at this and say, this is looking really real. And, you know, at least I feel like we've got a good shot over the next couple of weeks to go ahead and hit 300. So my mindset is, you know, I'm just going to buy this thing into dips. And that's exactly what I did today. As it opened right on the opening. So again, to me, you know, I look at these things as energy, storing of energy. So as I said, I usually do something on the open or the close. So this is how it closed. Closed right on the high. So you had these little key reversals here, made a new low, close on the high, made a new low, close on the high. So these bars are kind of pointing that way. And then you had the pattern that was really directing the traffic underneath here. So you've kind of got this inverted head and shoulders, double bottom here. You got two bottoms and this little thing, but it was also this price action where it makes a new low, close on the high. That's what it did yesterday. So I should have bought it on the close yesterday. It didn't matter. It opened like slightly lower, just like a tick lower. And I bought the, 288 calls when it was trading at 286. And then within an hour, this thing was trading at 289. And that little move, I made just a ton of dough on today. That nothing move. I think I did 3 plays and I made 300% on that move. Just using these little options. So, but the whole point is that I just look and see how the market closes, see what the construct is. Are you in a trend? Is there a pattern? And then I just make a little play. And then on that little nondescript play, I was able to take, from 1 to, I think 250 I got out. So not a huge move, but it wasn't a huge day. And then the S&P in the last 2 days, I got in at, these calls at 1, the 399s at 1, I got out at 4. So you can see the S&P had this little coil the other day, and I surmised that it was going to unwind like I am with Restoration Hardware. So you can see you have these two little, this coil, these inside bars. They're just building and storing of energy. And I bought the 299 calls here when it was trading at, I'm sorry, the 399 when it was trading, I don't know, 395. So it was like 400 points out of the money. But I was surmising that the energy was going to release this way because of the prior pattern. Here's the pattern. You have this funky little bottom. Now, the bottoms don't have to be in the same place. I think we can all agree that this looks like the letter W, looks like a double bottom. So if you've bottomed, you're just going to go higher. And so there was a little key reversal right here that told me that we kind of, stuck in the sand. And then I bought it right there, kind of feeling like the energy was going to go that way. And so, I was able to make 400% on this move. Kind of crazy. But that's the opportunity that's, involved in these markets. Now you're kind of bumping up against an area where you're going to hit some trouble, right around the 4070. This is exactly where the 200-day moving average is, and exactly where the downtrend line is. So I, take note of these levels. And so if I'm long, I will start getting out here. I might just play around with getting short there because it's probably likely just going to come off for a little bit, but not for long. This thing just looks like the momentum is going higher. So there are certain levels that are very important in the market. The Dow Jones is starting to get to levels that it's going to start bumping into some turbulence up here. But it doesn't mean it's a short. You just need to understand where the levels are. So look at that. This is an area, of supply so far. So we're getting very, very close to this being in nosebleed territory. But it does not look like it's going to come down. So just because there's resistance here doesn't mean you get short. You can lighten some longs and what have you. So to me, it all started off with that. It all starts with a pattern, and the pattern tells you the trajectory. Now, once, the game's on, once, what I like to do is get, the horse right as it's coming out of the barn, get that energy right as it's about to uncoil. As it gets more and more mature, then it gets real tricky to kind of understand, okay, what's your risk reward? Where do you get in? And so this is getting a little long in the tooth, but it doesn't mean that it's, it's game over. It's just, at some very nosebleed levels. So you kind of need to understand, look at this thing. It's actually just at the bottom of the channel, and, it looks like it's still going to go to the top of the channel. So this thing actually is telling us that, maybe a new bull market has started. We're going into a recession. We're definitely going to go into a recession, but that's the perversity of the markets. You'll read we're going into recession, and then that'll get you all scared of not doing anything. In the meantime, the market's ripping because the market is looking beyond that recession. It's saying maybe it's going to be a small one, or we've already pulled forward the damage, or the reasons never matter. I never ask why something is doing. Why is this going up? That's just, that's just knowledge for a cocktail party conversation. What I want to know is, what is, the trend? How do I get in this thing? And what's my risk? Where do I get in and what's my risk? Those are the questions you need to ask. Where and how much? Those are the questions. Kramer asked the whys. And the whys, I can spin you a story. And that's what people do. They buy stories. I want to know, where do I get in and how much do I have to risk? That's it. That's all you have to know in trading. You don't have to be an MIT economist. You don't have to understand, what Jay Powell's saying at, his conference today. I know that they had some minutes. I don't know what they said, and I don't really care. I just look at how the markets react to whatever information is coming out. So that's basically, what I do and how I do. Do you guys have any questions? Does this make any sense to you guys? Simon says, can you look at currency pair? I did talk about the pound Australian. I did tell our members to buy this on the weekend, and I think it's just slowly been gravitating higher. Where is this? There it is. This is a funky kind of pair. And so what I do is I watch how something oscillates around price. So, whenever you see a reversal like this, it kind of says something. But this is also, just a funky pair. You're in this area where there's just a lot of obstruction. And so there was a reversal last week. I said, try this out, see how this works. It's up slightly. But the way I would look at this is if this starts coming through last week's unchanged, which is around $178.10, I just get out. So my whole philosophy is, I watch how price oscillates around a certain area. Now that might be a little jumpy. It might be a little short term, but I'm not crazy about these currencies right now. So my thing is that if something kind of goes higher and then it starts coming down and starts going through the previous bar's unchanged level, then it could look like this, and now it could turn into a key reversal and go the other way. So I very much center. So I forgot exactly where my entry was. It was around 178.60 or something. So, you might have 50 pips in this thing. But I'm not looking to hold on it. If this thing starts going through 178.10, I would just tripwire, get out of it, and clean it off. So, I kind of just, let's see what happens here. I really don't know. It still looks very complicated. And there's just not a lot of currencies that I'm excited about right now. I mean, the dollar was going stronger for a long time, and now everything's kind of gone into a sideways trendless thing. I think maybe the euro could have a move to the upside now. Yeah, it looks like this actually, it's got a triple bottom here. This actually looks pretty good. So I think that you're starting to see a change in the environment. So when the dollar turns, that's going to be a trigger for risk assets. So while the dollar was going up, everybody was running into the dollar and everybody was running out of stocks and bonds and gold. But now it looks like the dollar is turning. It's got this double top and this triple top. And this is what makes me think that stocks are still going to go up, that silver might go up, that now it's like a green light for risk assets again. The dollar looks like it's topping and it's going to go that way. So you could probably buy the euro. You could probably buy the Australian versus the US. So these things are starting to turn. The Australian versus US. This actually looks like pretty good. You got a little bottom here. You got an inverted head and shoulders. You broke through the neckline. You retested it. And now if you go and make a new high, it's likely it's going to continue. So it does look like the dollar is turning. So that's going to be the first sign that you can go back in the water again. Buy stocks, buy gold, buy silver. And so it's starting to look like this thing is turning. No, I'm still in. I got out of the options today because it kind of hit like a resistance area on the chart at around 152. And so, I have only until Friday for those options to expire. So I took 400% out on them. So, uh, typically if I start making like 300% on something, I just get out of some. And so, and those are good general guidelines anyways, if you start having profits on something, get out of 20%, goes up more, get out of 20%, put a, trailing stop loss on the rest. Because these things are very trading markets. They're very sideways and banging. Once you kind of get back into a trending thing, then, my mentality is a little bit different. And options are a whole other, animal, especially when they're expiring, with 1 day to go. Tomorrow's a trading holiday. There are no markets. And so, if CRM is down $2, I could lose all of my money. But not all. I mean, they're in the money now. But I could lose an extraordinary percentage just on a stupid move lower. So I am still long the stock, Elon, and I expect to be in that for a while. Any thoughts on Tesla? Yesterday I talked about this little reversal. Sometimes these little, narrow range, they look benign, but, I never like to be facing a little reversal where, opens on the low and it looks like nothing. But again, I look at markets in terms of, markets go, but they don't, markets just don't go and then go and then go and go. They need to catch and release. This went, you need to have a pullback. So I kind of call this like the elastic band. When you pull back on the elastic band so you can build more energy, then you go again. Then you need to build more again, and then you go again. And that's the way markets work. It's ebb and flow. And what I try and do is catch it here. That was like, CRM on the other side, where CRM was at a low. And so I try and catch the energy before it's about, to release. I try and find these little areas. So you come down, you pull back on the elastic band, and then you go. And so I like to catch it right up in there. Here is an inside bar right here. All you have to do is put your sell stop there, and now you're into a great thing. So this is what I'm saying. Once a move is on, once a pattern, has been indicated and the move is on, then it becomes more complicated how to get into a good spot. So what I try and do is find these really tight coils where I know that my risk reward is very, very. So if I get in here, my risk is there, then I've got that kind of move. So, then once the move starts moving, then it becomes a random thing. Now you just want to wait for, this move to exhaust itself, have the elastic band pulled up, pulled back, wait for an area, wait for an indication, and then get back on the horse again. So if you're trying to catch something down here, after the energy's already been released, this is where you get into all the trouble. There's times to get in something and times not to. So now you got to wait for this thing to release and then go again. So you can see there's kind of like a funky little trend line. Look at that. I mean, these things don't just stop indiscriminately. So you got this downward trending thing. So I would look for this thing to come back to about 195. And that's where it should run into trouble again in this triangle. So again, we can look at, many of these charts, but it always starts with, I open up a chart and the first thing I say to myself, what's going on here? What is the trend? Is this an uptrend, a downtrend, a sideways trend? And I think we could, all agree that 380 to 180, this thing is in a downward direction. Then I look for the chart patterns that start indicating where and how I join this thing. And then once I see the pattern, then I look for, an inside day bar or a key reversal or whatever it is to, get me in where I understand where to join the trade. So here you could have put a sell stop there, a stop loss there, and then, here is another continuation pattern right here. And right at the top of this pattern, there were all these flashing warning signs. As it banged into this scheme, made a new high, close on the low, made a new high, close on the low, made a new high, close on the low. These bars are all pointing in the direction that this thing was, looking to go. So now once you see this reversal, all you have to do is put your sell stop there, put your stop loss there, and you're into a $70 trade. So the market tells, so I just look for the direction, the pattern, wait for what I call, an insurance bar where it tells me where to join that trade and how to assess my risk. So if you want to join Happy, let me just, the quickest, the best way is just to send an email to my assistant if you're want to sign up. Just send it to markshawsandpatterntrader@gmail.com with the subject line, let me in. So I put that in the chat box. Dwight, if you could put that on YouTube. I'll just finish off by, saying that, if you're deciding to get in, check out our review website. And actually, while you're at it, I would love to hear from you. So this is our review website. And I would really like to hear from you guys, especially the new people. I'd like to understand, if this, came across clearly, if you think this could be helpful, whatever you have to say, positive, negative, and then you can also come and see what other people have to say if you're considering doing something with us. So I've been doing this a long time. I make most of my money trading. I started the Pattern Trader really to give back. I know that sounds crazy, but when I started this thing, I didn't know that I was going to inherit a second family around the world. And so I stand for, just some very basic things. Let me just, in this world where everybody scapegoats and looks to blame something else, my whole approach is not to be a victim. We're all accountable. We're all responsible for our own decisions. And you can get anything you want out of this life if you're willing to pay the price and seek it. So, to my mind, there are only two ways to approach life. You're either a hammer or a nail. It's up to you to decide which one you want to be. I will always deal with my own cards in my life. We will always be in control and take ownership of our actions. We know we're the only ones in control of our destiny. We'll never blame the circumstances that are outside our control. If you want to attain elite success, you need to be willing to sacrifice. And true greatness only comes to those who are willing to pursue it at any cost. And that's how I've lived my life. And to me, there are three types of people in this world: people who live up to your expectations, people who don't meet your expectations, and people who exceed your expectations. And I hopefully like to be thought of as somebody in the last category. So I literally will kill for our members. I'll do everything I can to help you be successful. And it's really about a mindset. So we watch these things trading all the time, and it's really about a mindset. It's a way of perceiving the markets. I've learned to perceive the markets in terms of energy, and it's really helped my thought process. And so I try and explain this to our members. And the most useful thing I do is these sessions Monday through Thursday called the Boiler Room. And we get on and, I show them exactly what I'm looking to buy. So if I'm looking to buy the QQQs on the opening, I tell them why, what I'm looking to do and why I'm looking to do it. And I think that's kind of the best way. I send out emails, I do other things, but those can be open to interpretation. And there's so many things going on that the best forum for me is just to, be live, be looking at it. And again, I'm a trader. Whatever I'm telling you guys to do, you can be assured I am doing that. So I would, again, really appreciate, there's a little button here to write a review on this website. And I would really like to hear from you guys what your thought were from these few sessions together. So Alan says, I want in. So I'll be glad to meet you, Alan, and I look forward to having you. Thank you very much, Eduardo, as usual, for your kind words. Fiona, thank you. You explained things really well. I would definitely like to know more. Thank you. And just let me know what you thought, Fiona. Put your words in a review, and I'd be really appreciative of that. Tonderai says, thanks, Mark. Awesome session. Again, if you put some of your responses in this review section, I would really appreciate it. Rob, you're welcome. So I want to wish you guys a great Thanksgiving weekend. If you're in the United States, and if you're elsewhere, there's, somewhat of a holiday weekend. There won't be any market session in the United States tomorrow. And so I imagine currencies will also be pretty low volume tomorrow. So is there anything else? Marlene, thank you. I'm happy to chat about anything that might be on your mind for a minute or two. Otherwise, thank you for showing up and showing your commitment to yourself, and let us know if we can help you along your trading journey. Okay, that doesn't seem like there's anybody else. Francis, thank you. I'm new to trading, and this was very informative. Let us know what we can do with you, Francis. We'd be happy to help. John, you're always welcome. What time do you do the Boiler Room? That's a good question, Joel. I do it at 8:45 a.m. Eastern Standard Time. 8:45 a.m. So the market in the US starts at 9:30 a.m. Every week. And so we start the sessions about 45 minutes before. And I actually make trades in the pre-market session. If the market's going to open lower, I always have a list of things I want to buy and a list of things I want to sell. And if the market's going to open higher, then I look at what I want to short, and maybe I can get a good deal and short it higher. And if it's going to open lower, I look at things that I want to buy. But, we discussed that, we analyzed that. And there's a lot of engagement. There's also a community website. So once you join up for the Boiler Room, you're also part of a community website, and there's a lot of interaction and engagement. And we're, really focusing on building that community. So it's not just me and you, it's just you're part of a community. You can, get help, you can chat, you can exchange ideas. And so we're really focusing on that for 2023. Francis, how can I join the boiler room? Just go ahead and send that email, Francis. I can put it, if I can put it in the message box. Mark says, is there any way you can tell if a trend is going to continue either up or down without seeing a reversal bar? Sometimes the markets, well, is there any way you can tell if a trend is going to continue? I don't know how to answer that. I just look at something, I look at where in the maturity something is, and where the trouble spots are. So that's the thing. There's always like support and resistance levels, and they're very key levels that come in to play. So this is not something that you want to be facing. If you're short, you don't want to have a key reversal against you. So, this is still going to go lower, but, I just make it a rule. If I have a price action that is faced against me, I like to, have the wind at my back, not a gale force in my face. So you can see that there are certain areas of the chart that are formidable. These are, areas that the market doesn't, give up without a good fight. So you got to be very careful, around certain areas. So you might see a pattern here, but once it starts coming into this area, that's when you want to start taking profits. So it's every trade is different, so there's no one way to answer that, Mark. I basically look for a pattern, and then, I know that it indicates a lower trajectory. And then I'm always looking, okay, where are the areas where it's likely to have trouble? As it gets going, there was an area right here at 200. So you can see right here, it had some trouble, and then it went back from 200 to 240. And, wasn't a mistake that it bounced here, because there was a lot of support here. So it really depends what you're looking at, what the objective is. When the dollar yen was at 120, I told our members it's going to 150. So there are certain times where you start getting into like historic. So I was looking at this chart for 5 years, and I was mainly trading it to the downside. And I really thought actually this thing was going to break to the downside. So you kind of had this triangle right here. And you can see once it broke out, this is 5 years of kind of building this thing. So once it started to break out, I sent out an email to our members, and at 117, I said, this is going to 150. Because, at some point there is no obstruction. Once this thing started going, there was no historic, yes, there was something there, and then there was none. Then the train just left the station. So it really depends. Every trade is different. It depends where you are in the maturity of the trade. It's just not a one size fits all answer. I don't know anything about stocks or options. I really don't know anything about options either. I'll be quite honest with you. I just showed you how I made 400% on these option trades, and I don't know a thing about them. I don't know delta and theta and gamma and all of these things that you're supposed to know when you're trading options. The way I look at options is that I look at the underlying. So when I bought these yesterday, when I say the options are derivatives, right? Options move based on, the underlying instrument. So an option on CRM is basically a leveraged way to play CRM. So yesterday, when this was coming back through here when the stock was around 144, I kind of had the vision that this thing might explode. So I bought these, and it's pretty arbitrary, right? I don't like to pay more than $1 for anything. So I bought these $147 calls, which is a strike price, means that this market has to go through 147, and then I paid $1 for them. So it really had to go to $148 for me to break even. Otherwise, I was going to lose all of my money. So this was trading at about 144 when I started buying it, with the vision that this thing was going to move north. So I bought an out of the money strike. I bought a 147 call for $1, which means that it had to go to 148 for me to just break even. Now it turns out it went to 152. So now that dollar is worth 5. 147 to 152 is 5. So the intrinsic value of that option is now worth 5. It's 500 times what I paid for it. But this was all premised on what I thought that CRM was going to do. I didn't study the option. I didn't study the delta. I didn't study anything. I said to myself, we're at an area where if I'm right, this could make a big move. And that's what you need in options. You need a move, and you need it to happen quickly. Because I bought these things yesterday that expired on Friday. And when you cancel out tomorrow, that's a holiday. I only had 3 days for it to kind of get above my objective. But you can see it did it, in 2. So I look at playing options if I think there's a big move, and a big move that's imminent, like with silver. Silver's something's going to happen. And if it happens, it's going to happen pretty quickly. And if it doesn't, I'm going to lose my money. And so that's the thing. You got to be prepared to lose 50 or 100% of whatever you put into the option. But the good news is that's all you lose. So yes, it's very risky in that you can lose all of your money, but you can't lose any more than that. Whereas if you're short CRM and it goes straight up, you're going to lose a lot more. So options are a way of actually controlling your risk, but also taking advantage of a move that you think is imminent. And the minute it stalls out, then the option starts losing premiums very, very quickly. So you need a movement very, very quickly. Is it unusual for a trend to go back up over the past high and exceed it? I don't understand that question. Alan says, how can you use the dollar yen last cup and handle predict gold bull right now? Don't know that I see the correlation. So, and this, I'll end it right here. Gold. So this is also, gold. Also had this double top, and like silver, right here, when it broke, there was a weekly trend line right there. So when it broke this head and shoulders and this trend line, I told our members, and this is where I went short at 1801. Keep on grabbing the wrong. So right there where it tripwired this trend line and also came out of this double top, that's why I shorted it. And I made a whole bunch of dough on that move. Now, typically, you get a pullback to the trend line. So actually, when it went down, I also predicted it was going to come back and retouch that. And then when it makes a new low, typically, that should be it. But now, we still want to go back up. So now gold is looking, you could see there was an area here, rounding bottom. And then this is what I'm talking about. You don't want to have key reversals in your face. These are key reversals where it makes a new low and closes on the high. So those price bars, they actually say, look, man, this is not an area to be short. You know, if you're aggressive, you may take the long side. But this is an area where, you know, right along this area, you can see that these key reversals, so there's just a lot of buying in here. Now, you know, we don't know. It's a March point trend. I don't know. Will this sustain or will this crap out? I'm kind of, you know, on the fence, although it does look like risk assets are turning. And they look like they're turning higher. The dollar's turning. This is broken out. So now you have a little key reversal going. Made a new low, and it's going to be very important to me to see how we close the week. If we close the week on the high, then, you know, I think this is going higher. Now, all you can do is sometimes just test these ideas out. And the nice thing is, if you get in here, this is your risk. It's minute, but that could be a reward. And that's what trading's all about. It's about offsets. It's about where can you find something for the smallest amount of risk for a great upside. Is there an ETF for gold? There sure is. GLD, God, that's really poor writing. GLD, gold. And SLV for silver. So Mike, I don't just use a key reversal. I use it within the context of where something is in the trend or if there's a pattern. And, you know, or if there's a giant support level, or, you know, there's kind of a million little nuances, but I don't just look at a key reversal and every time I see a key reversal, I'm going to buy it. And then, you know, if I see a key reversal, I'm going to sell it. You can get a lot of fake outs. You know, you had a key reversal here. Does that mean so, you know, this is actually a good example right here. So right here, you had a massive key reversal, made a new low, closed at the high, and that's a weekly bar. So now you say, well, that's a big key reversal. But to me, what's driving this is this pattern right here. So this to me is just a sucker play. And maybe you got a little thing, but if you didn't get out, now you're sucking wind. So that to me was a key reversal, but to me, what was driving this play was this pattern. So you have to know, you know, when to hold them and when to fold them. You're welcome, Mike. All right, guys. Thank you very much. Thanks, Dwight. Have a great holiday. And hopefully I'll see you all somewhere along our respective trading journey. Thanks, guys.
All right, Mark. See you around.
Thanks, Dwight. Please leave a review. I'd really be interested to see your comments.